Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. Well, we had a market holiday yesterday, but the global markets were open. So we will discuss all about that. But before that, let us discuss what happened day before yesterday when the market in India was open. So on Monday, we could see the market actually opening, and then we could see an immediate fall. And the fall was really big. In fact, it looked as if the entire market was going negative, but then it took a support close to 17,200 and then started rallying upwards again. So we could see the market kind of closing still in slightly positive, but then sorry. So, but then of course it did give some volatility. It was a very volatile day, in fact, and it did give some confusion to the investors on what could be the next direction of the Indian stock market. Well, there was a holiday next day, so definitely a lot of traders would have taken safe bets or would have even squared off some positions because they don't want to carry forward on a day where the international markets are open and Indian market is closed. So one interesting thing to note was on Monday, the DIAs were net sellers and the FIAs have again bought. But the amount is of course around just close to 300 crores. But of course, this was a major news to actually focus on. So apart from that, if you look at what happened in the US, so after Indian markets closed on Monday, the US markets opened and continued to rally. And in fact, because of the rally in the US market, yesterday, SGX Nifty had even touched 17,600 at one point of time. Later on, it did correct itself and settle around 17,550. But then yesterday evening, US market opened and we could see SGX 50 falling further. So what happened in the US market yesterday? So there were two important things to note here. One, there was the jobs data that came. The number of jobs available in the market, and it is kind of reduced, which is a good sign because over a period of time it has not been reducing, and a lot of people had a concern that the economy is not contracting. So that was something to be looked at. But apart from that, there was the services PMI data that came in, which showed that services PMI has actually gone down, which is not a great sign for tech stocks, and we could see tech stocks falling. And third one was that a mail was sent by the CEO of JP Morgan stating that the banking sector worries are not over yet. So this actually led to fall in banks also, and overall we could see all the US indices actually closing in the red yesterday night. So naturally with that we could see the SGX Nifty also correcting itself, and we could see the SGX Nifty kind of coming down. So earlier SGX Nifty, which was indicating almost a 70 point to 80 point gap up, has now kind of fallen and corrected since morning. In fact, if I look at the Asian markets today, the Asian markets were also in the negative this morning. Of course, Chinese market is still closed, so we don't have a cue from that side. But if you look at other Asian markets, if you look at Japan is down, and Korea is also down. So overall, it's not looking great in the Asian markets right now. So as I see, Japan is down by almost 1.34%, down by 377 points, and SGX 50 is right now trading at 17,500. So that means all that big gap up opening expectation is kind of gone again, and we might see an opening close to between 17,450 to 17,500. But then it would be a flat opening, which could give some selling initially. But then how the market closes today would be an important thing to watch. So apart from that, we know tomorrow we have the RBI monetary policy meeting details coming out. So in fact, the monetary policy meeting has already started on 3rd and it will go on till 6th, that is tomorrow. And tomorrow the details will be out. So market would of course be cautious on that front. Now what came in surprising at this point of view is when most of the central banks across the world are actually sitting with small rate hikes, New Zealand gave a surprise this morning by increasing the rates by almost 0.5%. That was kind of surprising and shocking. So at this point of time, is it required? I'm not really sure about New Zealand, but if you look at India, I don't see any requirement. So the expectation is that RBI might actually increase the interest rate by about 0.25% tomorrow, and that might be the last rate hike for this cycle. That is the expectation of the market. But if at all something comes different from the expectation, there are chances the market can actually have some trouble. So that needs to be closely watched for tomorrow. Apart from that, if you look at today, we have the S&P 500. We have the services PMI data for India coming in at around 10:30 in the morning. So that should be also closely watched, because if that comes bad, there are chances that tech stocks might fall. In fact, tech stocks are already seeing pressure, because a lot of rating companies have given a negative rating on most of the tech stocks, especially HCL Tech, TCS. So this is a temporary situation again, like I said, because they say that the companies would be seeing some margin pressure, and also their exposure to BFSI could actually land them into small trouble for some time. So that is something which is negative. So probably we should be focusing on IT sector today. There might be some weakness seen that side. Apart from that, if you look at the market, the most important thing to be looking at tomorrow is expiry. It's a holiday shortened week. Tomorrow not only is expiry, but also the long weekend, Friday, Saturday, Sunday. So 3 days are holidays, and of course the entire global markets are also closed for next 3 days. But then, with such news coming out about the banking sector and all that, it is better not to take any new trades for the next week, and lose peace of mind for next 3 days. So I would be personally squaring off my position by tomorrow, and would not be taking any new trade for this weekend. We will look forward to take some trades in the next week on Monday. But until then, of course, the markets are going to see this pressure for now. Apart from that, there was some good news coming in from Bajaj Finance saying that their loan book has actually increased. That's something really good. And HDFC also has seen their loan book increase. So all these are some positive news among the bad news that's seen in the market. So one thing for sure is that the Indian markets are, looking like it is going to consolidate in this range. I don't see a big, like we have discussed earlier also, I don't see a big movement to come upwards. Similarly, I don't see a big fall also in the upcoming days. So, like I always say, stock markets can never be predicted, but just anticipated. But this is what I anticipate, that is, the market could stay within the range of 17,000 to 17,550. So that could be the range for this week's expiry as well. In fact, this is what I discussed last on Monday also. So that's exactly what I am continuing with the same view for now. So that's it for now. In fact, it's very important to see how the market closes today, because that could again kind of give us a direction. Is the next phase of bearish starting, or will the market continue to stay and try to move up from here? So that's it for now. This is what we can speak about, in terms of the market today. Let us discuss more about the market in tomorrow morning's podcast. Let's see what and how the market actually closes today. So that's it for now. This is Srikanth and signing off. But before we leave, do remember to press the like button if you love the content that we share, and do share the podcast with your friends and relatives to help them learn and invest together with us. Goodbye. Have a great day.